Welcome back. You're watching Traders Corner. I'm Bronwyn Seaborn, and with me at the desk, as usual, is Garth McKenzie, founder and editor of Traders Corner. Garth, thanks for your time today.
Hi, Bronwyn, and welcome to Traders Corner.
Yes, starting off as Julieta goes on maternity leave, so let's get into it with a look at the S&P 500 as usual. Last week you said that it was looking a bit bullish, so what's the chart telling us today?
Yeah, that's it. So last week we said it was looking strong, and it had broken to a new all-time high, but it did look as if it was beginning to consolidate a little bit, and then it might just gradually pull back in a very controlled fashion. And that's exactly what's happened over the last week. If you have a look at the chart that's up on the screen at the moment, you can see this overall rising channel that has been intact since April of this year. That is still very much intact. You can still see rising highs and rising lows on that chart. So overall, it is still a very bullish picture. What seems to be happening towards the end of the chart here is the possibility that it may be forming a little bull flag pattern. It's pulled back towards this 2870 area, and that was where the prior high from January this year came into play. So it's gone on to make a new high. Now it's pulling back in a very controlled fashion, which is perfectly healthy. And I would expect that after a little bit of healthy consolidation like it's doing now, we probably will then see another leg to the upside. So if it is able to break above the upper boundary of that little blue flag that I've highlighted in blue over there, that would be bullish, and then it would probably see us moving on to fresh new highs. And what I do wonder about this is whether the steepness of this uptrend is actually going to start to increase, because that does quite often happen. You've got a rising trend, it gets steeper and steeper until eventually you get some sort of a blow-off move, and then a proper correction ensues. But what makes me think that is the fact that that last pullback that we saw in the middle of August didn't make its way to the bottom of the channel. The market carried on up, without pulling all the way back into the bottom of the channel. So it does kind of look to me as if we might be starting to embark on a steeper trajectory of this rising trend here.
So we'll be keeping an eye on that. Then let's go over onto the Nasdaq 100. That was a long trade of yours recently, but you closed the trade. Was that a good move? It
was a good move, and we'll actually get back into the trade this week, as you'll see in a few slides' time. So what got me interested in this about 2 weeks ago when we did this trade was we identified that there was this rising trend, same as what we see on the S&P 500, and a bullish triangle pattern that had formed. It's almost an ascending triangle, and it's fairly textbook in its form. You can see there's 5 waves, 1, 2, 3, 4, and then it breaks out on the 5th wave. So from a textbook triangle perspective, this one ticked all the boxes. I bought it on the breakout through the top of that triangle structure at 75.30, and I had a target of 7,800. Now it didn't get to 7,800, it got to 7,700, and then it started to form reversals, and you can see quite long tails on the daily candles over there, which indicated that there was some selling pressure coming in at the higher levels. That concerned me a little bit, and when it started to take out the prior day low, I decided to exit that trade, and ended up selling at 7,614. So not even halfway to the target that we were wanting. But nevertheless, we made money on that trade. It closed out with a profit of $168. And what's happened in the week subsequently has actually proven that that was probably the right move. You can see the index has pulled back further, and now it seems to be down towards the 50-day moving average here, near 7,400. And that to me is likely to present some support in the near term. You can see how the 50-day moving average has provided support on each of the prior pullbacks over the last 3 months. So it suggests to me that we might see this Nasdaq finding a little bit of support around 7,400 here. And as a consequence, that is actually the trade that we're doing this week. So we've gone out of the Nasdaq and we're going straight back into it now again.
Which is quite an unusual strategy, I think, for the show. You're getting back into the stock. So give us some insight into why.
Yeah, so the reason being, as I said, that it's pulled back towards the 50-day moving average. The 50-day moving average is that blue line indicated over there now. And you notice how on the prior 3 occasions, back in August, again in July, and then in late June, each time the Nasdaq pulled back to that 50-day moving average, it seems to have found support. Also, there's that rising channel that it's not perfectly fitting, but it's good enough for my liking, indicating that there is still a pattern of higher lows and higher highs evident over here. So to my mind, I think this area around 7,400 on the Nasdaq 100 probably does present support. And overall, to me, this chart is still bullish. There's no doubt about that. So it remains a sort of a buy the dips, and as such, I've decided this week to buy the dip. So we've gone in with $2 per point this week again. It's the same position size as what we took on the prior trade. I've gone in at 74.46, and I'm going to use a stop loss here below 7,300, which would basically be that middle of August low. If it starts to take out that mid-August low, then I would look to close the trade out. That would also imply that that rising channel has then broken to the downside, and it will have broken below the 50-day moving average as well if it gets to that point. So I don't foresee that happening, but you never know. I mean, as we always say in the market, anything is possible, and that's why we always trade with stop losses and with correct position sizes, because you know anything can happen. But I think from a high probability perspective, this looks good to me. So we've gone in at, as I said, at that level. The risk is effectively works out at $292, but we'll go through the mechanics of that trade right
so
now.
let's drill into that, walk us through all the kind of mechanics that go with that trade.
Right, so we long from 74.46, as I mentioned. My stop loss is 7,300. So that means that the risk on this index is 146 points. Essentially, if it goes 146 points below our entry, that's where I will close the trade out and concede that I've got this one wrong. I like to never risk more than 2% of our total trading capital on any individual trade. In our offshore portfolio at the moment, we have $16,500 at our disposal. So 2% of that works out to $330. And if we take that $330 risk, the capital risk, and divide it by the points that we're willing to lose, that's 146 points. What it means is that we can do $2.26 per point. Now, you can't do it in the fractions. You've got to do it in a round figure, so it's either $2 or $3. So I've rounded it down. I've gone long at $2 per point on this Nasdaq index. My target is somewhere between 7,700 and 7,800. Now, that means that a risk to reward ratio varies. If we get to the lower target, then my risk reward ratio is 1 to 1.7. If we get to the higher target, it's 1 to 2.4. So somewhere in the middle there, you've got a risk to reward ratio of around about 2 to 1, which makes sense to me, and that's justifiable.
So we're hoping we've bought into the dip and we're going to ride it upwards.
That's the plan.
So let's come back home then and take a look at the top 40 futures. What's that telling us?
Yeah, it's been quite a ride down over the last 2 weeks. I mean, I was just looking at this. Over the last 9 trading sessions, the top 40 futures lost 4,500 points. Yeah. It's a massive loss in a very short space of time. Come about on emerging market jitters, et cetera, et cetera. Where we sit right now is there's uptrend support that comes in at 49,600. I must say, I just checked my phone before we went on air, and I see it's below that level now. But if you have a look at the areas that I've circled there, those are the prior sort of deep pullbacks that we've seen over the last 4 months. And you can see that typically these pullbacks into the area around about 49,000, maybe 49,500, those have presented buying opportunities where the market has traded into an extreme weakness perspective, and then it's rallied up off of that level. So I think what we must watch for quite carefully in the days ahead is for some sort of a reversal to occur in that type of area, between 49,000, 49,500. If a reversal is able to occur up from that area, that probably then presents us with the possibility that we could see a bounce. But do just keep in mind, we're only now, I think it's 8 trading days away from the September futures closeout. And there's quite a lot of optionality at that 50,000 level. In other words, that's an option strike where there's lots of open interest. And what we've seen today is as the market's pushed below that 50,000 level, it has sucked in some additional selling as some options-related hedging has occurred. And that tends to weigh on the market. So that's something to keep in mind, and it may very well keep us under pressure until the closeout occurs, unless, of course, we get some exogenous global factor that pushes us back above 50,000, and then you could quite feasibly see a big short squeeze occur. So that 50,000 area is going to be quite an important zone to watch in the next week or so because of the option interest at that level.
Yeah, futures closeout is next week, Thursday, I think.
Yes.
So then if you're looking at a stock-specific perspective, you said Netcare is something we should be keeping our eyes on.
Yes, I'm going to be keeping an eye on Netcare this week for a possible long trade. I like Netcare because it's one of these stocks that is very, very liquid, and there's not that many of them on the JSE these days, unfortunately. We've seen liquidity levels drying up quite a bit. But Netcare is a stock that typically trades several million shares per day. And that's the kind of thing you want as a trader. You want lots of liquidity, lots of activity so that you get in and out easily. The other thing about Netcare is that it seems to always trade in a relatively nicely tradable range. You know, most days you'll find there's a rand or maybe R1.50 in terms of movement in this share price. So if you combine all that liquidity with that movement, it actually makes for quite a nice trading stock, particularly if you're looking for something that you want to trade on an intraday basis or maybe, you know, take a 2 or 3 day view on. It provides plenty of movement and plenty of liquidity. From a technical perspective, you can see there's a rising trend that joins all the lows since January. That comes in at about 27 Rand. And also your 200-day moving average also comes in at about 27 Rand. You'll notice as well that I've put the recent downtrend in there from April through all the recent highs. Now, in August, the price broke out above that downward trend. It's now coming back. I suspect what it's doing here is it's going to give what we call a goodbye kiss, where it comes back, tests the support, and then it runs up again. So what I'll be looking for in the week ahead is any reversal off this 27 Rand level, I think would probably provide us with a buying opportunity. I'd look to then buy that with a stop loss maybe below 26, and we look to try and trade a range between, say, 27 and 30 Rand.
So we'll be keeping an eye out there, and we'll perhaps look at it again next week, but we're almost out of time, so let's check in on the local and offshore portfolios.
Right, so the local portfolio is down a little bit from last week because last week we were stopped out of a position on the top 40. We lost just over 600 Rand there, but the portfolio is still up 17% for the year to date. And then offshore, we've got the Nasdaq trade that we closed out for a profit this week, and then the one we've gone back in is presented there. So we're up 10.5% on the offshore portfolio for this week.
And then you've also got a high probability trading course this Saturday. Give us some insight into that.
Yes, it's almost fully booked now, but I have a high probability trading course in Johannesburg this week, Saturday, the 15th of September. There's just a couple of spaces left for those that are interested, and anyone that would like to attend, please send me an email to garth@traderscorner.co.za, and I'll email you all the information.
And of course, if you missed the course, you can subscribe to the free weekly newsletter as well.
Yes, that's it. So if you go to traderscorner.co.za and you go to the middle of the page, you'll see that there's a link there which says free weekly email. Click on that, you register your details. It takes less than a minute. And what we'll do is send you an email every Tuesday providing you with details on what's coming up on the show for that week.
Great, and of course everyone can tune into Traders Corner as well for more information.
Yes, absolutely.
Garth, let's leave it there for today. Garth McKenzie is founder and editor of Traders Corner.